Hello and welcome to this special episode of Focus On. On this episode, we put a spotlight on the gathering of over 2,000 business leaders, investors and policymakers from Africa and around the world at the annual summit of the Africa CEO Forum in Abidjan, Cote d'Ivoire. I'm Akin Obakeye. Africa's private sector players gathered in Abidjan for a two-day conference to discuss the driving role of private sector players in the development of Africa. One major takeaway remains the significance of impact investment in key sectors on the continent. CNBC Africa caught up with Yaron Chwela, CEO of Mitrali, who highlights key projects the company is embarking on that offer value to Africa.
So the Mitrali Group is a Swiss company with Israeli roots. We are doing impact projects across Africa in water, energy, food security, housing, technology, healthcare and education. This is what we do. We're trying to create a positive impact with the projects, trying to create value for the nation, trying to create value for the people by harnessing innovation in every project that we do. I'll give you just a few examples. When we're doing a project, creating or constructing school, you don't want just to build a classroom with 30 chairs, 30 desks and a blackboard. In order for Africa to bridge the gap and to create a sustainable future for its young generation, you need to bring e-education. You need to bring training to the teachers. You need to create virtual universities. You need in healthcare to bring telemedicine. In water, you need to bring the best technologies in order to bridge the scarce water that is not available for everyone. If you are talking about food security, I can share with you that, for example, in Israel and Switzerland, the cows are generating or producing much more milk per day per cow. This is something that we are bringing in every project in order to bridge the gaps.
Yeah, because interesting you mentioned all the priority areas for your organization, and I'm looking at the youth bulge in Africa and the opportunity you see in that.
The youth?
Yeah.
So, and I think it was discussed today many times, that in just a few decades, Africa will be home to more than 50% of the people under the age of 15 in the world. These people deserve to live life to the fullest. They deserve to have proper education, gainful employment, create families, and really enjoy life. And this is something that we understand that it comes with education, it comes with employability. We are creating and constructing vocational training across the continent in order to give them the right education so they can have better employability, higher salaries, and generate more value for the countries in the end.
Yeah, because you mentioned some key sectors that I really liked. You talked about healthcare and water. And I'm trying to imagine how you're working to create your development impact in those areas.
So, for example, we are constructing today five hospitals in Angola, and we are constructing 350 clinics here in Ivory Coast. In order for us to generate the value, you need to really bring the best things that Africa needs. And we understand the problems, really identifying the needs of Africa, tailoring, custom-made the solutions that will be best fit to the market, and then assist in the deployment. We're not just handing the project to the customer, but we are hand in hand for 2 years assisting in making and ensuring that the project will be extremely successful. So this is how we think about all of these projects.
Yeah, because in your experience working with governments on the continent and even the private sector, where do you think are the low-hanging fruits in terms of driving the most impact on the continent? And looking up your company, I couldn't help but notice something I saw there talking about creative synergy. And tell me about that philosophy as well.
So our philosophy that we are working in many sectors, as you understand. We believe that each sector is assisting the other sector and creating higher value. So for example, when we are building tens of thousands of apartments in Angola, it's not just about the apartments. We are creating communities. And when you create a community, you need to bring the water, you need to do the wastewater management, you need to bring the energy, you need to bring the school system, you need to bring the clinics, and then you create a community that has employability and has sustainable life. that it's a vibrant community and not just apartments. And that's the way that our synergy between our subsidiaries is creating a higher value for the project.
Finally, as you leave Abidjan, what are you leaving with from the conversations here?
I believe that I met very interesting people, created new connections and new networking. I believe that this set of new networks will help us create together a better future, better prosperous future for the African people.
One area Africa's private sector seems to rely on is partnering with small and medium-scale entrepreneurs. CEO of Yango Africa, Adeni Adebayo, shares insight into what's driving an efficient partnership on the continent.
It's very commendable that we are talking about private sector as the drivers and the engines of building the economic wonder of Africa that we want to see. Because we all understand, we all know that capitalism in its very essence is about private individual initiative. And this is essentially what I believe Africa needs to be able to take us to the next level. At Yango, we are a business in the technology space. We're building ride-hailing business. But even in that building of ride-hailing business, we're building entrepreneurs locally. Across all our markets of operations in 12 countries in Africa, we're focused on identifying transport companies locally and empowering these transport companies to be able to expand their businesses. For example, in Cote d'Ivoire, where we are today, we have our partners who started with us with 10 vehicles and today operate a fleet of more than 1,500 vehicles, doing turnovers of more than $30 million annually. So these are the kind of stories we want to be able to inspire across the continent, and that is the reason why our approach is fundamentally different from what most of the other players on the market do. We come into the market and we partner with local transport companies and help them to tenfold their operations, to improve their operations and to actually tenfold their revenues.
Yeah, because we're here talking about increasing the amount of unicorns on the continent by tenfold. I know Yango is not in that list yet, but let's look at that pattern, how you see possibly your company, say, in the next 5 to 10 years being in that list.
Okay, so we are very bullish about Africa, and I believe actually that the opportunity for 30,000 unicorns already exists. A very good example is the transport sector. People need to move. We've seen a lot of wonderful stuff happen, for example, in fintech. Now, the question you start to ask yourself was, the value in fintech, was it created or was it harnessed? And I would argue that it was just harnessed. People already had this money. They wanted to move value across different places. And if you create the platform that allows them to be able to move things across more easily, then you create the value that at the end of the day turns into this unicorns in fintech that we celebrate today. So as we break down the barriers of movement of not only money, but also people across board, we will be able to get and to able to create more value that would lead us to the path of $1 billion. To be honest with you, for us at Yango, we're looking at the major economies across the world and across Africa, and we're not looking at them from the perspective of the GDP per capita of the country. We're looking at cities as the engines of the future of unicorns on the continent. Lagos has 200 million people. If you look at the GDP per capita of Nigeria as a whole, you become pessimistic. You're like, okay, $2,000, there's not a lot of purchasing power. But if you start looking at the GDP per capita of Lagos, it tells you a very different story. When you look at the GDP per capita of Accra, it tells you a different story. Not of the country of Ghana. Right? And as we look at cities as the engines of creating this new growth, we need to start creating solutions that helps to harness already the opportunities that exist on those markets, whether that is in fintech, whether that is in mobility, whether that is in just like technologies, whether that is in like building new solutions for education and so on and so forth. And in this process, we will be able to see that path towards building even bigger companies across the continent. And our company is focused on these cities that are actually the engines of building the economy of the future for Africa.
Yeah, because no doubt the digital transformation is going to play a huge role in unlocking that next level of growth for the continent. Quite a lot has been said here at the forum, but for you, what has been some of the major takeaways that you're going to go live here with in Abidjan?
So one of the things that I leave here with is our understanding that the continent now understands that if we want to go far, we need to go together. So bringing down barriers of trade between countries is important. The African Free Trade Act that was signed and that is being implemented across board is a very, very necessary step in the right direction to getting us there. And as we bring down more barriers, we would see the flow of people, the flow of goods, the flow of services, and an increased transaction between the countries lead to more abundance for everybody. And that is, I think, what it means to be African.
With global headwinds impacting growth momentum in Africa, Alain Yourmain, CEO of Mauritius Commercial Bank, speaks to how the region's financial sector is coping with global economic pressures.
Let's take it back to the days of the pandemic, which we've all suffered from, and then came the rising interest rates. And I think in Mauritius, which we've managed to navigate quite successfully through the pandemic, despite the tourism was down to inactivity during that time. Thanks to support from the central bank, from government, to make up for the drop in revenues from the key sectors of the economy. The tourism has bounced back quite well since the opening of the frontiers. And I would say that the rising interest rate has had an impact, but at the same time in Mauritius, in view of the dynamism created by the tourism sector that has picked up very well, we've seen that enterprises are being able to cope with those rising interest rates. And I must also say that inflation, which has been also a key element in the recent past, because of the rising import bills, which is also a phenomenon in Africa, has been in many ways supported also by government with some of the initiatives to make sure that there have been subsidies in key areas like the food and gas, which has enabled the population to weather the rising inflation. From the bank perspective, I think we've, in view of the fact that the economies have picked up quite well, we've seen that even the rising interest rate hasn't had so much of a big impact on the corporate customers, and they have been able to cope with, in view of the rising revenues that they've all been able to see, thanks to the pickup of the economy.
Yeah, because we're seeing these shocks play out internally, even exogenous shocks as well, like you rightly mentioned with COVID and taking things back and how that has impacted economies there. But then for the financial sector, I would like to hear from you what else you'd like to see, because yes, we've seen concerted efforts play out. You talked about the central bank and some of the work from the development partners as well, playing on the continent. What would you like to see more in terms of contribution from the financial sector?
I think it's in terms of how we can play a role to support those industries. I think we've got to be more targeted in how we deal with the different the scenario. At MCB, we very much focus in Africa on trade finance, which is support of procurement of oil and gas, which is a key sector for the African continent. I think we have built up an expertise there that will enable a number of those traders continue to supply oil and gas to the African continent, despite the very difficult environment. On the other hand, a number of those corporate customers, be it the multinationals or the private equity funds or the regional corporates that are based in Mauritius, as using the platform of Mauritius IFC. We've been supporting those activities that has enabled investment to continue to flow into the continent, and also to ensure that whatever services are required in terms of procurement, in terms of cash flow management, treasury management, that they continue to get support of MCB during those difficult times.
Yeah, because for young companies in Mauritius that are looking to scale, which is what we're trying to do here, get companies from about the unicorns in the continent, about 300 to about 3,000. What sort of de-risking instrument would you like to see play out as MCB from other development partners before you can also assist some of these companies that are looking to scale up?
I think just a few examples of how we've seen small corporates that have grown with over time. I'm talking about, for example, the textile sector, the tourism sector. Mauritius, when it started its textile industry, it was sort of very much, the activities were very much based within the Mauritius ecosystem. And over the years, there's been a sophistication of that activity. And I must say that it has now integrated the region within its development. And just to give you an example of the tourism, the textile sector, where we've seen corporates now importing cotton from the African continent, spinning into fabric in Mauritius, and then sending the fabric to Madagascar to be cut and made up the fabric into shirts and T-shirts, and then exported into South Africa. And I think the 300 to 3,000 theme on the Africa CEO Forum is very much relevant, because I can see many enterprises within different sectors, whether in textile or whether in fertilizers or agro-industry, where they can scale up thanks to their capacity to serve various markets. And I think that's also where the Africa continental free trade argument can also work, because you need an integration of those several markets to be able to integrate that value chain, which is important if you want to support those African champions to scale up. And we have been playing quite an important role in that, in supporting those emerging enterprises to scale up, because we see the relevance of that activity within the various parts of the African continent.
No doubt, integration still holds much more promise. But I'd like to switch to the just energy transition and the opportunity that you are seeing in there. And also, you can talk about some of the work you're doing in that area, helping companies that are looking to, take advantage of the opportunities in that just transition.
Yeah, I think when you do trading in oil and gas, I mean, obviously that's a key sector for us to support. But at the same time, we know that over time we've got to transition into greener energies, like gas itself, and then renewable energy. So we've been trying to work with all the traders that we deal with to ensure that we can actually participate in their transition, or even motivate the transition, so that we over time we can gradually shift, bearing in mind that the continent is still, with 50% of population only having electricity, there's a big gap to bridge. So maybe a quick acceleration will be leapfrogging into different forms rather than the traditional oil and gas, but we still believe that oil and gas will still remain over time. But I think the message is, how do we, together with the actors around, the key players around that ecosystem, how can we transition into a greener energy base over time?
Yeah, because if anything, the last 3 years has shown us is that government alone cannot solve the development challenges of the continent, and there has to be that partnership between the private sector to get the much needed traction that we need to address these challenges. And I'd like to you to speak to how you would like to see that play out in terms of partnering with government to solve development challenges.
Yeah, I think it's critical, public-private sector collaboration and discussions. We've seen that at a smaller scale in Mauritius, where we've developed a few of the pillars of the economy, thanks to everyone around the table to decide how are we going to facilitate the tourism sector or the textile sector or even the financial services sector. And I think that's the formula for future development. And talking about integration of the region requires even more collaboration, because now we're talking about G2G also, because obviously when you cross frontiers, you need collaboration between government. So I think it's a whole new game now, and I think the Africa CEO Forum, bringing countries, corporates together, is definitely the way forward in terms of trying to get some form of working arrangement in how we can develop those value chains, those regional value chains, those ecosystems that will work for Africa in terms of being able to start from the very beginning of the raw product until the final distribution of that product. And I think this opens up a whole new perspective in the development of the continent.
Yeah, definitely quite a lot to play out in terms of the value chains across the continent for opportunities for development. But finally, as we leave here, for you, quite a lot has been said at the opening ceremony today, and I'd like to get from you what has been top of mind, gathering all the CEOs here together, and how you think we should be engaging further to help Africa meet its needs.
Well, I think everyone, the smallest to the biggest, has got its role to play. And we can bring to the party some of the experiences which I talked about within some of the sectors we've dealt with. Mauritius has traditionally been sugar-based, so we can bring a lot of that expertise on the table. In fact, there are some Mauritian companies that are managing factories in Africa, but it's not just producing raw sugar, it's also the whole value chain of how that can work. Tourism is the same. I mean, we've developed tourism over a very long time, and I think we can bring our management skills, management of resorts, to the continent as to how we can help develop. So I think it opens up a whole lot of opportunities, but everyone has got a role to play. Every country has got a role to play, and I think that was the key takeaway I could hear this morning is with all the prime ministers who were listening, and that there's a real wish to get Africa to develop, and why not develop those ecosystems around the continent that would integrate the various economies in Africa.
But how best can financial institutions unlock the opportunities on the continent? Mustafa Raji, Managing Director of Raw Bank, believes a symbiotic handshake between the governments and the financial sector remains crucial.
The last 3 years since COVID, it's been a very sort of challenging time for global markets and economies. In coming from DRC, we sort of witnessed super high energy prices. We had supply chain shortages, wheat prices that went from $150 to $450 per ton. You could immediately see that this was going to hurt the consumers in many of the developing markets, and the developed markets as well, for that matter. I think at this stage where we are today is, today OPEC Plus announced a reduction of about 1 million barrels of crude oil production per day. So I think we're sort of at the end of that cycle, of the inflationary cycle. Indeed, it was a tough challenge. I think central banks across Africa had to raise rates quite aggressively. You saw devaluation on multiple currencies, and that really affected the consumers and the savers in all these economies. There is something that stands out on the DRC. Being a dollarized economy, we did suffer from this imported inflation, but at the same time, being dollarized and having a safe savings in this hard currency meant that we had no real devaluation of our currency. So we were relatively sheltered as compared to other African markets. And I suppose that was a blessing in the context of what we lived through over the last 2 to 3 years.
All right, now let's look at one key area in which you sit right in the middle of the opportunity in the just energy transition for a bank like yours operating in a country like the DRC, which is currently the belle of the ball in terms of investors looking to maximize the emerging industry, talking about the raw materials that will fund that space. How are you working in that regard with some of the mining companies to help scale up the activity?
Indeed, as you know, Ken, the DRC is becoming sort of a very large producer of copper. I think we'll probably be a top 5 producer of copper globally, and the DRC holds about 60% of the known reserves of cobalt globally. 2 key ingredients that go into batteries of electric vehicles. At this stage, the DRC is very upstream, so it's basically we're in the mining side of it. We haven't really started tapping into the value addition of these minerals to create more finished products. But over the last, let's say, 15 years, when a lot of investment has gone into the mining sector, we sort of moved from artisanal mining to industrial mining. And today we can safely say that the majority of the copper cobalt produced in the DRC is industrialized and mechanized in that respect. Our bank played a key role. We assisted a lot of our customers in financing, if it wasn't their projects, at least their working capital requirements, smooth operations of their export flows, ensuring repatriations of funds, and sort of keeping the machines turning. This has all been supported by extremely high commodity prices that we've seen over the last 5 years. So copper has been, above $8,000 for a good period of time. Cobalt prices peaked out at about $80,000 about a year and a half ago, and we sort of see them in the $35,000 price range today. A lot less than what we had hoped for, but I think that these are just sort of short-term volatility swings, especially in the cobalt market, given that you sort of have one country that's supplying the world's cobalt and generally one single consumer, which is China, which is today sort of the only economy that's in a meaningful way transforming this cobalt into finished product, such as batteries. As we look forward, we hope that Raw Bank will play a much more participative role in the value addition and enhancement of our raw materials into finished products, and that the DRC could capture a larger portion of the value addition that's being created from these base metals.
Yeah, because when you look at the development agenda of the continent, government alone cannot fund this. And I'm trying to imagine how the private sector, how you imagine the private sector should be working with government in terms of a partnership to more or less move the needle in terms of our development agenda and, score points in terms of the trajectory of the continent.
So, look, at this stage, our total mining portfolio for our bank alone stands at about $1.3 billion. So that's the commitment we've given into this sector from our banking, from our just one bank alone. Consider that DRC is operating with about 15 banks in the market. You would think that perhaps $2 billion is being financed to the mining industry through the collection of these 15 banks. But indeed, as you rightly said, government and the financial system do need to come together in a more meaningful way to be able to unlock that value. We also sort of need to upgrade ourselves in terms of the risk ratings of the DRC, because that keeps international banks relatively shy from financing businesses that are operating in our economy. When you look at these businesses on a standalone basis, I mean, they have fantastic financials. Their leverage ratios are extremely low. They're cash flow positive. They're earning tremendous amount of profits. However, because of the risk rating of the DRC, international banks are still shy on pumping in a lot of capital into this market. It's a gap that we're filling to the best of our ability, but in future we hope that that's going to change, and that as the risk ratings go up, we'll be able to attract a lot more international capital.
The Africa CEO Forum continually champions the notion that the private sector should be the engine room of Africa's growth. But that's all we can take on this episode. Thanks for staying tuned. Until next time, thank you for watching. I'm Akinyo Bakeye.